Welcome back. Well, let's talk about Muthoot Microfinance or MFI. The company reported strong business momentum in Q4. Dispersals increased, asset quality improved and the margin expanded. We have Sadaf Sayeed, who's the CEO of the company, joining in to discuss more on the Q4 performance. Hi, sir. Thanks for joining in on the show. I want to start by just talking about the provisions this time, which have risen quite significantly on a year-on-year as well as on a Q-on-Q basis. So before we get talking about the basics, just want to get this out of the way. What resulted in the elevated provisions? Was there an element of write-offs? And what can we expect in the coming quarters?
Thank you, Ekta, for inviting me here. I think if you look at the overall credit cost, our credit cost is in line with our projection. Our credit cost for the full financial year is around 1.7%, which is actually a significant improvement over the previous financial year, where the credit cost was around 3%. If you look at standalone quarter, the credit cost is around 62 crores, in which around 53 crore is a write-off that we have taken. If you compare with the standalone quarter Q4 last financial year, because that was a clean quarter, because we have taken the entire cost, the write-off in the Q3, that's why I think comparative number doesn't look kind of even. But if you look at for the full financial year, that will give you a correct picture. Our credit cost has been in line with the expectation of 1.7% as compared to 3% last year. And our incremental NPA, the fresh flow has only been around 6 crores. So we had closed last year with the NPA of around 214 crore. This year total NPA is 220 crore. And this is despite that the AUM has increased by 32%. So it has grown from 9,200 crore to 12,194 crore. So credit quality has been really good in the current financial year. And that has been one of the reasons that the return on assets and entire profitability of the company has improved. We have recorded highest ever profit for Muthoot Microfin at 449 crores of profit for the full financial year. And if you look at the total comprehensive income, it is around 463 crores. This is above our guidance of 450 crore that we had given.
All right. Sadaf Mangalam here, good to see you in. We spoke just a month ago, less than a month ago, when you had come out with your fourth quarter update itself. And these are a couple of points that you had made then. You said that AUM growth will sustain at 30% plus. NIMs will hold around 12.7%. And we will have 1.5 to 2% sort of credit costs that will remain in that range itself over the long term. These numbers stand true for the next year, right?
Yes, absolutely. As we had said that we'll continue to grow at the same CAGR. We have grown by 32%. And if you take our last 3 years of growth, we are at a 39% growth rate, compounded annual growth rate. And this momentum will continue. The growth is because of our expansion of distribution network. So we had opened highest number of branches this financial year. We have opened 336 new branches, and which is around 111 branches more than our average kind of a branch opening. We open around 225 branches every year. This last year we had invested upfront. So that will help us in good state in terms of our growth. And as I said, in terms of our NIM, we are at 12.7% NIM for the full financial year. For the quarter, the NIMs have even improved further, around 13.5%. The reason for that are twofold. So one is our cost of fund, incremental cost of fund is rationalizing. Our incremental cost of fund is around 10.39%. And also our equity base, which we raised during the IPO, has increased. So that has also helped us to reduce our cost of fund. And in terms of portfolio quality, as we had guided, we will be at around 1.7 to 2%. We are at the lower spectrum of that credit cost, and we believe that that will sustain for the next financial year as well.
So then, don't you have potential to increase your net interest margin guidance for FY25? You said that you'll be around 12.7%. You've done 13.5% this quarter itself, and you're saying that the incremental cost of funds will remain stable for you all. Don't you have potential to probably increase that?
Definitely, our guidance is that we will be somewhere around 12.9 to 13% for the full financial year. We would pass on certain benefits that we receive because of reduction in cost to our customers. So last financial year, just after the Q3 results, we had reduced our rates by 55 bips. Going forward in the financial year FY25, we will also pass on certain benefits to our customers. That's why I'm saying that overall cost NIM will remain around 12.9 to 13%. It can go higher also, but that's our conservative estimate.
All right. I wanted your guidance or targets on 3 specific numbers before we let you go, Sadaf. One, the last time you joined us, you said your portfolio, 97% of which is has a 2-year tenor. And you are looking at long duration loans as well. So what's the idea of your portfolio tenor going forward? Second thing is your ticket size, close to around 38,000 rupees. How do you intend to take that going forward? And the third thing is your non-south to south ratio. How do you plan to change that mix? Because you're diversifying away from there as well. So non-south, south, ticket size, and the duration of your portfolio.
Yeah, thank you, Mangalam, for asking that. In terms of our average maturity period for our loans on the contract level, it is 24-month, 97%, and 3% on a 36 months kind of a tenor. Incrementally, what we are doing is we are also raising long-term liability. We have just closed a market deal of around $75 million. 662 crores worth of debt we have raised through ECBs. As the liability mix improves, we will continue to increase our asset mix also for 36 months. In the medium term, I think that 3% will go to around 10%, and in the long run, we will have around 70-30% mix, 70% 24 months and 30% would be 36 months. That is our strategy. In terms of diversification, we have added Telangana this financial year as one of the territories. We are now present in 19 states and union territories. We will add Andhra Pradesh also this financial year. And in terms of our south versus non-south portfolio, our long-term strategy is that 50% of the portfolio will remain in south and 50% of our portfolio would be in rest of the country, in which north constitutes right now 23% of our portfolio and around 12% comes from east and balance comes from west. I think that mix will continue. We have added Andhra and Telangana, which will contribute to more growth, but overall mix, we will remain 50% from south and 50% from rest of the country.
Okay. All right. We're going to leave it on that note. Pleasure talking to you. Thanks very much for joining in and speaking with us. So that is Muthoot MFI. We need to take a short break on that note, but we have